So gold's success is good for Bitcoin.
Look at this chart. Gold runs first. Bitcoin always runs harder. Let me share this with you. A chart from 2016 to 2026. Gold is an orange. So typically Bitcoin is an orange. In this case, gold is an orange. Gold runs first. Bitcoin runs harder. Gold runs first. Bitcoin runs harder. Gold runs first. This is where we are today. From 2024 to 2026, gold has run pretty hard. And now, if history rhymes, funds will move towards Bitcoin. Bitcoin always runs harder. And we know that gold just reached an all-time high of $4,000 an ounce for the first time ever. Also, silver. Silver reaches a new all-time high of $50 for the first time ever. Bitcoin's done well, but Bitcoin hasn't really ran yet, as gold is now up 53% year-to-date versus Bitcoin just up 30%. And while I do want to share with you the latest XRP news, the latest Solana trade, watch today's whole video. The reason why both gold and Bitcoin are doing well is what's known as the debasement trade.
If this year keeps going the way it is, gold is beating it right now, but I'm kind of laughing as I say that because if gold is number one and Bitcoin's number two, then you're kind of pointing to the same thing. It's this debasement trade that JP Morgan has talked about.
Your money is getting devalued. It's flowing into harder assets. And gold has gained $4.7 trillion in market cap in just 45 days, nearly 2 times Bitcoin's entire market cap. Meaning, in just 2 days, the gold price went up 2 of Bitcoin's entire market cap. That's crazy. Markets are now starting to view gold and Bitcoin as correlated assets in the same macro trade. Once gold tops out, we will see liquidity flow into Bitcoin. And again, that's not saying anything too revolutionary. It's nothing new. Gold runs first, then Bitcoin. This is in 2016. In 2019, gold runs first, followed by Bitcoin. This was into 2021. Gold just ran into 2025, now into 2026. Even if we continue for 2 to 6 to 12 more months, we know what happens next. And gold's success is good for Bitcoin, as explained by macro analyst.
Even in most financial crises in the past, what you saw was generally the dollar strengthened and investors' flight to safety included dollar-based assets and wanting to save money with US bonds. And that paradigm has fundamentally changed. I don't think people are looking for dollar-denominated assets. That's why gold is actually so powerful in its outperformance and noticeable by even Americans. And Bitcoin, I think, is part of that narrative. The difference there being that Bitcoin still hasn't found institutional flow the way gold has. But you know, institutional flows can just mean different things for retail investors finding allocations for. Gold is, to be honest with you, very hard to store, right? I know it's easy to buy GLD, the ticker, and have allocation to gold's price. But one of the things people have called on for years, even the most diehard gold bugs, is that GLD is not gold because it's an IOU that once you feel like you need it at the exact moment of its tail risk, it may not be actually available and it could just evaporate. And in that sense, that challenges the idea of custody, right? The idea of self-custodial ownership, to which anyone who owns Bitcoin, I think, will find that aspect much easier to do. Of course, there's still the Bitcoin ETF that is a parallel comparison to GLD, but it's much easier to buy Bitcoin and store than actually buying bullions and trying to find a safe box and put it through and hope you don't get robbed. So I do think eventually, like, people will see there are different benefits to Bitcoin too, where it's actually pretty useful from like a velocity of transaction and velocity of transfer perspective. I think institutions, once they see that, will also find this to be a much more efficient way to actually store wealth. And we're just at the very, very early innings of that story. So gold's success is good for Bitcoin. I have always shared with people that we must root for some success of gold to the outcome that we're driving about self-sovereignty. And then the journey advances once people realize that there's different trade-offs to which Bitcoin can outperform even gold. And I think what we're seeing is more of that migration across the mass population psyche.
And this starts to explain why gold runs first, Bitcoin always runs harder. Because while they're both used as a store of value, meaning they're both hard assets in a world that's endlessly printing money, meaning they're both finite, they're both scarce. Gold has a moderate because actually we don't really know how much gold there is in Earth. We sure as hell don't know how much gold is in space, but it's one of the scarcer assets. Bitcoin is mathematically scarce. But if there's one characteristic where gold fails is portability.
And so the reason gold failed was it was too slow and too difficult to custody, and therefore your property rights were always going to be impaired by a central actor.
That gold that you own, if you buy it in your portfolio in your brokerage account that's stored in New York.
Imagine the entire world running on gold-based credit on a gold standard when all the gold in the world was sitting in London and New York City, and most of it was in New York City.
Also, if you do own the gold, if you do have Eurobars of gold in your house, can you really make that highly divisible? What are you shaving off pieces of gold to trade for guns?
And so Bitcoin really is practical for an individual to take custody, and it's practical for a company to take custody.
And even if the entire internet goes out globally, which number one, I believe the world is trending more digital, more people are getting internet, not less. But let's say all the internet goes down globally. They're satellites that run the blockchain. And as this education becomes more clear, that's why every time we start to see more and more funds move into Bitcoin, gold first, then the funds typically move into Bitcoin again and again. Bitcoin's market cap today is 2.4 trillion. Gold's market cap today is 27 trillion. If Bitcoin reaches gold parity, that puts one Bitcoin at 1.37 million. And to counter this, some people say, well, all of gold markets gold's market cap is not pure store of value. Some of gold is used in electronics. That accounts for some of these trillions. Typically, people say, well, at least half of gold's market cap is pure store of value play. So, even if this was 13 trillion, that's still a nice 5 times minimum from Bitcoin's price today. Now, it does look like the Market Structure Bill, the Clarity Act, is getting delayed due to government shutdown. Members of Congress say they're still aiming to pass the Clarity Act by the end of the year. It was supposed to be end of this month, but now end of year despite government shutdown.
I think we still have an opportunity to get clarity across the line by the end of the year, although the focus and attention is making sure that we get the government back open. There's a lot of ongoing conversations as well about clarity and market structure on the Senate side. I'm actually continuing in conversations with some of my Senate colleagues on that topic throughout the week this week. And so I'm hopeful that as we come on the other side of the shutdown, that we have an opportunity to hit the ground running and have the Senate move forward quickly. And I think the opportunity there is to build on the success that we had in the House legislation. And if the Senate chooses to use the House text as their base text, I think what we have is an opportunity to get this bill still done, signed into law by the end of the year.
But even thinking about the worst case scenario, what if it's pushed because maybe it gets kicked back to the House? Both the Senate and the House have to agree. The banks are getting in there and arguing about certain DeFi rules. So, even worst case scenario, if this is pushed to next year, Q2 of 2026, as long as we get this in before midterms, when things really change, we do have all of 2026 worst case to get this done. But this all explains the dip. HBR tumbles 5% as government shutdown delays critical ETF approvals. The good news is we do at least have the Genius Act, which regulated stablecoins, which is really good for Ethereum. It's really good for Solana and other L1 blockchains. co-founder of Solana Anatoly, explains that trillions of dollars are coming to stable coins. This regulation has already been passed.
I think we're kind of entering that stage where we're seeing, mainstream consumer adoption, and it's probably going to be driven by stablecoins. If we do actually get to, trillions of dollars of digital dollars minted across public blockchains, that's going to drive a ton of consumer adoption.
Traders still believe that a fat green candle is coming for Sol. Why would Solana go up? Well, ETFs are expected to be approved in the coming days, which I'm not sure why the HR critical ETF approval would get kicked, but Solana would get approved in coming days. Either way, whether it's coming days or in 2 months, it's coming. Also, the chain continues to grow rapidly. $2.85 billion in annual revenue for Sol. And why this matters? Solana growth is outpacing Ethereum growth by 30%. And I loved this. I think this is one of the best perspectives why Solana is not an end-of-the-year 3-month play. Solana is a decade play.
By the end of the decade, Solana is going to trade the majority of publicly tradable tokenized securities. It's going to trade them on rails where there are 20 millisecond block times with multiple concurrent leaders with 1 million transactions a second. That is our thesis. And when it's able to do that, it is not vying for the best decentralized network. It's not vying for the best blockchain. It's vying for global world supercomputer status. To me, this is exactly what we're playing for. Solana seems to be the most suited blockchain to do it. And in so doing it, what you're going to find is Solana grows out of just being a blockchain. And now we're looking at Solana as the digital Suez Canal, the digital Panama Canal, the digital Strait of Hormuz, right? It is going to evolve from just a digital network to a global geopolitical force. And that's what we're so excited about.
The digital Panama Canal is awesome.
Thank you for watching my video so far. Please watch my previous videos to increase your knowledge about digital currencies. Please don't forget to like and subscribe. And write to me in the comments whether you think Bitcoin's market cap will reach gold or not.